So my next guest was bullish throughout all of last year, so he wasn't surprised at that strong finish. But, you know, after the first back-to-back 20% plus gain since 1998, the big question has been, can the market repeat? Joining me now, Kobeissi letter editor-in-chief Adam Kobeissi. And Adam, you know, I want to start with you, as I have with all the guests today, about just today's session, right? We popped out the gate, all that enthusiasm coming from CES. Then we kind of sold off. Some was economic data. I think some was just good old-fashioned sell on the news, profit-taking. What are you making of it?
Yeah, I think, look, I've been saying this for a while now. I think now that we're heading into 2025, you are going to see more volatility. The swings are getting a little bit larger. But, you know, at the end of the day, the market is still being very much driven by a few names. Right now, the S&P 500, the top 10 stocks reflect about 35% of the index. Actually, the top 10 stocks are now almost 800 times larger than the bottom 75th percentile stock, which basically means that never in history has the market been more concentrated than it is now, not even in the Great Depression. And that means if those 10 stocks can continue to run, the market can continue to run. And I think in 2024, the theme was that we were seeing you know, a bunch of headwinds, but the market kept on rising. Well, why was that? It's because those 10 stocks ran. And right. I think in 2025, that could still be the case over the near term. All
right, so for the audience, right, the three growth sectors that we're talking about that's being powered by the Mag 7 and Mega Cap are the three losers, right? Consumer discretionary down 2%, info tech down 2%, communication services down 0.8%. There are 5 sectors in the green, but they're such small inputs, right? So you're looking, I know you're bullish for the S&P 500, but could we also have a year, if those names go sideways and everything else goes up, on the surface it wouldn't look that great, but you could actually have more winners than you had last year?
Yeah, and I think, look, the rally also needs to broaden a little bit here. And I also don't think it's bad to have a period of choppy price action or technical consolidation after such a long run and such a sharp run higher. And actually, if you look at the historical data, in the first quarter after a presidential election year, you typically see the S&P 500 gain about 1% on average. We're moving 1% a day in both directions right now. I think we do see more consolidation, more choppiness. But as I said, I still think these large cap names, I mean, you're talking about CES and NVIDIA yesterday. I know we're off the highs, but it made a new all-time high this morning. NVIDIA is rapidly advancing their products, and the rate of advancement continues to accelerate, which is incredible to watch. And that's going to spread throughout the entire industry because NVIDIA is really the input for basically all these large cap tech names and the technology they're producing.
Yeah, forget about the sell-off, folks. What they have on the drawing board, what they're putting out there is it's dominance. It's pure dominance. Hey, let me switch gears while I've got the chance, because in treasuries, right, you like TLT. We're going to put a chart up. It has been an unmitigated disaster, but you like buying this weakness here, right?
So yeah, we've been trying to get a little bit bullish here of TLT. This is like the hardest trade to really go against right now because it's just been in a straight line lower since the quote unquote Fed pivot began. I think it's down over 15% now since September, which is that's a huge move for bonds. I think at some point, with the 10-year starting to near 5%, something has to give here. I mean, the Fed is still not really giving up on their Fed pivot, and a lot of these interest rate cuts have been priced out. So I think there is a potential for, you know, a buy the news type reaction in TLT if inflation data comes in a little bit softer than expected, or even if the labor market starts to soften a little bit more. It's just right now, I think we really have an extremely hawkish situation priced into bond markets. I'm looking to maybe catch a bounce. We'll see if it happens.
All right. Well, we get the jobs report Friday, so that can help clarify. Hopefully, it will help clarify stuff. Adam, see you soon, my man.
Thank you, Charles.